Copper and aluminium edged lower today on the London Metal Exchange as investors took some money off the table over worries about a dip in the demand from the top consumer China, and while also a firm US dollar has also sapped the metal's appeal. Investors are obviously getting more cautious, and that is presumably prompting some profit taking. That's what an ING analyst said today. And with the US dollar index snapping back above 90 on Wednesday, the dynamics from the macro market are less supportive for copper. If we have also a look at the Asian copper premiums, the Yangsheng premium fell to $28.50 a ton. That's the lowest since February 2016, and that is indicating that demand is weakening for imported metal into China as the high copper prices are deterring the downstream consumption. So demand concerns have raised onshore in China, and that is particularly the case in copper. That's what also a broker from Marex said today in a note. Furthermore, we have supply threats still from the looming election in Peru and also from the strikes at the BHP's Escondida mine and the Spence mine that are also supporting, of course, the prices. But overall, the projected higher demand for copper because of the global move towards a lower carbon economy alongside an expected weak supply response is seen as a trigger in the future, and that will keep prices more elevated. That's what most of the analysts are saying. If we have a small look at the current market prices, the 3-month futures on the LME, we can see that copper has lost today about 1%, as trading at $10,141.50. Aluminium is the biggest loser today, losing almost 1.5%, trading at $2,445. Zinc was up even 1% earlier today. Now it's up still about 0.6%, trading at $3,080 a ton. Nickel has been able to catch up 0.5%, trading at $18,195. Lead is almost unchanged at $2,201, and tin is also, well, slightly up 0.2%, trading at $30,825 a ton. On the currency side, as I said, the dollar index is firmer after hitting a 5-month low, as actually a pickup in the US manufacturing kept bets alive for a quicker normalization of the Federal Reserve policy. And the US or stronger US dollar makes the dollar-priced copper less attractive to global buyers. So that is also the case as the euro has not been able to hold the level at 122. We're trading less below it. So it will be quite interesting if during the next days the euro will be able to go again above 122. Regarding positioning, it's quite interesting that funds whittled down their long positions in LME copper futures to 26%. That was the open interest of last Friday. In February, we've been at 68%, just as a comparison. So money managers are cutting their net long position for a third straight week to almost 34,000 contracts in the week to May 25th. So overall, the base metals are for the most part holding up in high ground, but it is definitely tin and zinc that seem to have the momentum right now to extend their gains even further, while nickel seems to play a little bit catch up and having underperformed since February's setback. Copper, aluminium, lead seem to have lost some upward momentum for the moment. But the overall trend, however, is still bullish, and there is the prospect of ongoing recovery from the lockdowns and also from the supply disruptions from delayed chippings and also from potential strikes. But as economic data improves, the market may well get more nervous about central banks tightening, and that could spook equity and bond markets. So price corrections would likely impact the commodity markets too. And as such, we think that the market will focus more on the economic data, especially on the short-term direction.